Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kovsar. This is effective for the week of June 1st, 2026. Let's get started. Technology climbs its way back to the top after having that little bit of a brief break. Back to ones across the board for overall ranking of 3. New to SEAF member or people new to the SEAF model should understand 3 is the top score that you can get with runs across the board in your trading, tactical, and strategic quarter. Coming in at second, consumer discretionary, 2s across the board, showing a nice little showing there with the overall ranking of 6. Best score you can have when you have an overall ranking of 3 for the top spot. So these showing some strength. And then we got real estate, materials, both coming in at 13. And the reason we choose materials in this situation is due to the fact that the trading week is higher. So when these scores are the same, we default to the new money. The new money is going into materials, so real estate gets dropped out. As you can see here, energy took kind of a bit of a header after being a SEAF signal last week, dropping down into the red. That is with strong outflows that we'll highlight in just a minute when we look at our rainbow charts. And worst on the board is utilities with an overall ranking of 28, not to be outdone by the 26 and 27 for financials and energy. Nice positive skew on healthcare, but nothing to do there yet. And let's head into our heat map. Heat map shows technology showing quite a bit of strength, 0.99% on the trading week. So a big inflow, anything over 0.4% in this column is significant inflow. So nice, strong one, especially in the top spot. Number 2 coming in at 0.25% here for the 2. That's pretty good for a secondary ETF on the list, but nice. Showing a little bit of strength. Not a ton of accumulation here. We've been talking about it for the last, 3 or 4 weeks now, how majority of the money is just flowing into technology, and we're not seeing really any accumulation outside of that. And that is the story that the right hand, the tactical month, strategic quarter are really showing off here on this particular heat map. A lot of accumulation in the technology space, a lot of money flowing in there. Not a lot of money flowing elsewhere. These are, either yellow, which is near 0, or slightly tinted red, which means just slightly negative. But overall, not seeing a lot of cash flowing through to anything outside of technology. Again, consumer discretionary 0.25. That's a decent number for the number 2 spot on the trading week. A little bit of flows, 0.13 for the industrials, coming in. What is that? 5th place overall, held back by its strategic quarter. So, again, technology really is the glue here that's making this all go. Last week, 1.28% up in terms of all the assets flowing into the 11 sector spiders, and 3 of the 4 days were up. You can see here those assets really kind of starting to take off here. We came down, tested near that 21-day moving average for the 11 sector spider AUMs. If you aggregate them all, this is what the chart looks like. Really taking off to fresh all-time highs, easily clearing that 380 billion mark, and heading north to that close to 384. So assets really still pumping into the 11 sector spiders, and again, majority of that asset flow that we've been seeing, that we've been tracking, a lot of it going into technology. So really, continues to be a technology-led rally. And as you can see here, the S&P 500 has done well since we broke through that 21-day moving average. I always like to caveat that we don't make any of our investment decisions on one particular indicator or one particular number, but it's a quick way to see, is money flowing into the S&P 500 or is it flowing out? This is a really good tool, and it recently has done pretty well adhering to this 21-day moving average. Assets trading above the 21-day moving average tend to see price appreciation in the S&P 500. When we're below the 21-day moving average, we are either flat to down. So pretty good tool overall. And as right now it shows, green skies ahead as we continue to trade well above that 21-day moving average. Heading into our rainbow charts. Technology looking really strong again. We took a little bit of that breather. I talked about that little bit of sideways movement last week as we were headed near the top, right back up toward the top. Threes across the board. This is as high as you can go. And you see here we accelerated off of this little bit of a sideways pattern here. So potentially a little bit of a breather for some investors before they re-engage the market, but overall really strong relative performance trend coming in for technology, and we're sitting back at that top spot, allowing us to we've picked up a good chunk of this move. So it's been nice to see to outperform what has been pretty much an up market as well. So not only is technology doing well, but it's outperforming the S&P 500, which, as we can see in the chart here, has been up as well. So technology really doing its job here for the SEAF model. Consumer discretionary. We've been kind of hanging out in this neutral. We've made several attempts to hang out in favored over the time. We've picked up little nice spurts of relative outperformance as we've moved into this favored territory. We're doing so that now a little bit of a downtrend in the consumer discretionary overall in terms of its relative performance versus SPY, but we have you can see a little bit of life here as we're bouncing off the bottom here as we head into favored. As I mentioned a little bit beforehand, we have not a lot of accumulation in any of the sectors outside of technology for the tactical month and the strategic quarter. We do, these are, we got near zero here. So picking up what we're putting down here is mostly being driven off of this fresh money. This money continues, though. We can have a nice little rally in consumer discretionary, but we need to see some follow-up cash. It is SEAF signal. It is the best place to be at the moment, as it's where the cash is going outside of technology. So still a wonderful SEAF signal, but I'd like to see some additional flows to kind of spread this green out over multiple time periods so we can really build up that strength and that momentum to really drive a nice, strong relative outperformance for this particular sector. But seeing a little bit of life here, so a good place to be here with consumer discretionary. Similar boat with materials. Materials has been kind of floating around in the lower favored, higher neutral for a little bit now. Having a little bit of a difficulty keeping up with this strong pace that the S&P 500 has put on, but we're seeing a little bit of life here as we re-engage back into favored from neutral from last week. So goodbye materials again. A lot of times what happens is as the money starts to flow into these sectors, SEAF model is catching it early. And if the idea works, we run with it. We stick with that particular sector for a while and we pick up that nice strong outperformance. As we might try to do here with materials. And if that money flows out, then we're right back out and into something else. And in an environment where outside of technology, nothing else is consistently seeing asset flows, this is exactly what you want to do, because you want to try to buy these spots where, the relative underperformance is a little bit of low. We can kind of catch a little bit of a run here if money starts to flow in, if that idea starts to track in. But really outside of technology, investors seem to be trying to, roll the dice a little bit and find what's going to stick, what, everybody's going to agree on. Energy, we saw a strong reversal in energy. We were sitting up to our upper favor toward last week, crashed down into a void. A lot of asset flows out, negative 0.7 on the trading week. So a big outflow in energy. And as I've been saying, energy, kind of for the entire year, this is very much geopolitically dependent. This isn't similar to technology where, technology is riding high in an AI boon and hoping that, there's a lot of innovations and cost savings that AI could provide a lot of these companies to increase revenues, which is what's being speculated on and really driving a large portion of that relative performance for technology. Energy has not been the case. There wasn't some giant breakthrough in how to process oil or natural gas or solar or anything of that nature that falls under this energy category. This is largely driven by geopolitical and news headlines or tweets. So energy has always been one of those spaces. We've seen it over the last year or two where, money flows in hard and then comes out. Money flows in hard and then comes out. We got a similar bucket here. So we had a little bit more of a sustained move in energy, with geopolitical tensions in Venezuela and Iran. But, it's kind of died off a little bit here, and it looks to be going back to this money flows in, money flows out situation that we tend to see with energy stocks or energy ETFs. So as of right now, third from the bottom, worst on the trading week, big strong outflow and starting to trend in that wrong direction for energy. Utilities is a similar boat. Nice ride up with utilities as we saw nice relative outperformance as we sat in this favorite for a little period of time. Really kind of starting to break down through, hit neutral, attempt to come back up, down and avoid. One more attempt up and back into a void, which has resulted in some strong relative underperformance for utilities. Utilities is currently our worst sector out of the 11, so it definitely continues to be a place to avoid. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.